video, we're talking about the 6 best loans in Texas for first-time homebuyers and homebuyers in general, and just a little bit about them. If you're new to this channel, which everyone is, my name is Crumpacker. I'm a mortgage lender here in Dallas, Texas. I can work in Texas, all over Texas, Oklahoma. I wanted to start this channel just to help people learn about different loan programs, different ways to buy a house, and help people on their home buying journey. And that's what I do as a mortgage lender. I help people on their home buying journey, help be prepared, know what to expect, know what to look for in different areas of Dallas, what you might like about them, pros and cons of the area. So that's kind of what this channel is going to be about. But wanted to start off with the different loan programs just so you can kind of learn what those are and how they work, and that it is affordable to buy a house. And here's a couple different ways to do it in Texas. So if you like these videos, feel free to subscribe, like them, click the bell so you know when we make the next one. But starting off, you have your veteran loan, your VA loan. It's 100% financing, which means you don't have to bring any money for the down payment. You do have to pay prepaid for the mortgage, but you don't have to bring a down payment. It's 100, which means if the house is $300,000, we as the mortgage are $1,000, and you don't have to bring any of that, just the cost to get the loan and pay for the taxes, etc. About that, obviously, is it's 100% financing. There's no that you have to have if you put less than 20% down. And if you are a disabled veteran, you actually get tax incentives, and the loan amount will be a little bit lower as a disabled veteran. So there's some super nice incentives there. Thank you for your service for that. And so we want to help make homeownership possible with the VA loan. And the second loan we're going to talk about is the doctor loan or the dentist loan. Doctor or dentist, if you're licensed in Texas, you can also get 100% financing with no private mortgage insurance. And that is if you're just starting residency or fellowship, or you're a practicing doctor, whether you're self-employed or W-2 income as a doctor, it doesn't matter. We can do it all. You just have to make sure you have that Texas license in place and are starting that job within the next 60 days. So if you're matched in your residency and you have your license set up, you can buy a home with 100% financing, where you just got a great program for doctors and dentists to take advantage of 100%. The third one is your conventional loan. Now, this is the most standard loan across the board, and it's as little as 3% down as a conventional loan. A couple things about the conventional loan that are different from the others. So you do have to do the down payment plus closing cost and prepaids, but it is as little as 3% down. You can put more than that. You want to make sure that you have around a 700 or better credit score to make sure you're getting the best interest rate. Otherwise, we might need to look at the next option I'm going to talk about. Yeah, 700 credit score. We're going to make sure you have income, decent income. They're a little bit more strict there. It is a super strong loan. It's probably one of the most widely used loans. The nice thing about it is the PMI falls off once you reach 20% equity. So that's kind of some of the differences there, but makes your offer look super strong, getting you a good interest rate, and one of the cheaper options out there. The next one is the FHA, Federal Housing Administration loan. It's a great starter loan for first-time home buyers. Maybe your credit isn't as good, you have lower income, and you just need a little more flexibility, but it's a great loan. It's a great starter loan. You know, some of the downfalls are your private mortgage insurance stays even after you have a small funding fee with the VA. You have a small funding fee with the FHA loan, and you have to put 3.5% like conventional. The private mortgage insurance is a little bit higher, but it is a great loan and gives you a lot of flexibility. Remember, when you're buying a house, it's somewhere to have fixed monthly payment, and you're building equity and what we call forced place savings. So just because you have to look at an FHA loan doesn't mean it's bad. It just means that's where you're at. But you're building equity, building wealth through home ownership, and that's the most important thing here, no matter which loan program you have. The cool thing about FHA and conventional is actually there's down payment assistance programs. The one I like to use the most is TSHAT, and they will give you from 2 to 5% of free money to use for your down payment based on where that home is, your income level. There's a couple different factors that go into that depending on job type as well. But there are programs out there where you can get 2 to 5% of your down payment covered, and you have to cover the closing costs and prepaid. So just like a VA and a doctor, you can also get essentially 100% financing. Someone else is paying up 2 to 5% of your down payment, and if you only need 3.5, you only have to come up with 1.5 of the down payment. which is huge. The last loan is 100% financing as well. It's a USDA loan. So if you're not as worried about location, you want to live outside of the city proper limits, that's a huge option for you. Depending on income and area, you can qualify for a USDA loan with 100%. These are great programs and super easy to qualify for. So if y'all have questions about any of those, if any of those might fit what you're thinking, please reach out. Would love to talk through, see if that's the best option for you. One thing to remember when it comes to loans and using them, you can always refinance into a different loan program if you fit that profile. Once you buy the house, there's no time frame that you have to wait till you refinance. Obviously, we want to make sure it makes sense, but you can always refinance your mortgage. You don't have to wait. And we're going to see a lot of that happening once the recession is over and interest rates come back down. It doesn't matter if you start off with an FHA or USDA, anything like that. You can always refinance out of that into the conventional, lower that private mortgage insurance. There's just a lot of different factors that go into that, but there's options and you're not stuck with that loan for the duration of the house. And what we see is people refinance within 4 years, and most people don't stay in that first house for longer than 5 to 10 years. So it's not forever, but you are building equity, and that's the most important thing. So if you have questions how to start, whether it's 300, 900 days away from when you're going to buy a house, we want to make sure we're building a game plan for you to buy a home and your time frame. So please reach out. Would love to be on your team and help you build a game plan and build wealth through homeownership. Again, if you like this information, feel free to like, subscribe, comment, reach out. We would love to help you on your home buying journey, and that's why this page exists.